Markets around the world have entered turmoil in the month of August, and while that's expected in pre-election years, we'll be discussing today some of the big indicators that show us that 80% of the time, markets tend to do this next. We'll also be discussing FundStrat's Tom Lee. What does he think about markets? Historically, a pretty big bull. Has he turned bearish in recent weeks? And of course, this week is Jackson Hole. We know that not only will we be looking at massive earnings from Nvidia, but the Fed might get on board the sell train. The S&P 500 has hit mean reversion. At the same time, we've seen dark pool activity underneath the hood. And of course, the yields. Everyone's talking about it. How much do we need to be concerned about what the US 10-year does next? Join us as we cover stocks, commodities, and cryptos in our special weekend edition of the Markets Around the World. Well, welcome back everybody to the Daily Show where we talk about markets, including the macro, leading indicators, and of course the hottest charts. We've got all of those and more coming up. But let's take a look at the week in review. It was a sell across the board, no greater than Tesla, down 11.19%. And as we discussed, when we took out that big demand or support level, we just basically have flash sold day on day on day. But have we hit some kind of support? Later on today, we'll be talking about what we think for Tesla and some of the other big tech stocks moving forward. So here's one of the things that FundStrat's Tom Lee is talking about, and it's an indicator we've used on this channel quite a few times, the McClellan oscillator. And of course, it shows us that we've hit 100. Now, when we hit a negative 100, it turns out that over the last 4 years, only one time did the S&P 500 not recover over the next 30 days. In fact, it usually did a plus 4% over the next 30 days. The question will be timing. So of course, we need to talk about that as we go through the stats. We also know that this is very in line with what we've talked about as bullish percent index. Bullish percent index has hit 55.40, and we'll look at some oscillators later on today that are showing us that maybe there's a little bit more selling that could happen here before we get any significant bounce. But the big thing here is that bullish percentage indicator has done exactly what we usually expect. It's marked a top, it's marked a relatively significant sell-off, and now we look for a turn in this market moving forward. If you're interested in that type of stuff, remember to subscribe to the channel and of course hit the notification bell. SPY market signal risks, are they worse or better? Well, it turns out that we have had a bit of smart money purchasing, although they've been selling net for about a month and a half now. There was a small purchase inflow, which we'll update in our next video. But lower market risk is actually returning as we now move towards mean reversion. And we've hit it on some of the metrics for the S&P 500, etc. So what happens with yields? Well, everyone's asking this question, and we've talked about this synergy a few times before. Basically, every time the US 10-year gets out of control, we usually see something going on. And you know what happens? Central banks have been stepping in. So basically things are breaking almost every 6 months at this stage. We got the UK gilt implosion of 2022. We had the Silicon Valley Bank collapse of 2023. And of course, recently we've had the WeWork issues / now we've got Bank of Japan and of course China issues. What happens next? Well, unfortunately, it's kind of like a self-revolving door. No one's prepared to deal with the issue. So central banks have been plugging the hole. Is it just a matter of time until they figure out some fancy way of bringing liquidity back into the system and therefore supporting the markets? Well, historically, you would say it probably is based on, of course, volatility. We always get volatility every single year. In fact, most years you'll see since 1950, but over 50 plus years, 70 years of data, we basically can go through and say that we always expect a 3% dip pretty much. We generally expect 5% mild corrections. And when we're talking about 10 or even 15% corrections, they're actually quite historically rare. Again, it's not impossible right now with these high yields for longer, but I think we'll find a lot out at the Jackson Hole Symposium this week of whether the Fed is even concerned about this market and whether they're actually quite happy to let it go. Just a reminder out there for people, if you haven't followed us already on X or Twitter, it's the links down in the description down below, and we're posting a whole bunch of interesting information there, including these charts here. And this is what we've been really playing off in August, and of course we're talking about this into September. The first one is volatility spike increases. Here's 2023 overlaid the last 9 pre-election years. Can you see where we are? Can you see what's happening with the volatility? It's amazing how good the synergy has been this year with this particular pre-election overlay. We've also got here what happens to the S&P 500 during the month of August, and also the fact that we usually double dip back into September. So remember, it's August and September that tend to be volatile, and we actually usually form a base somewhere in this next week that sometimes is the low, and sometimes it's also just like a point which gets taken in the back end of September but runs into the back of the year. And that's something that's happened pretty much every single time over the last 30 plus years of pre-elections. We've also broken the data down a little bit more in today's market in terms of what's going on here. Wayne Whaley over on Twitter or X has actually brought up some chart stats, and we've talked about how positive generally these stats are. So in the current 4.78, it's actually a little bit more than that, correction. If this holds true, so we continue to see this market kind of depressed, then it would be, according to this angle, that we usually see 26 of the 29 cases over the next 5 months be a win streak. So basically, we see here that markets over the next little period, especially when we've had 10% earned in the previous 6 months, which of course we did this year between January and June, we usually have a 12-0 bull run rate. Now, you might not like that, but that's the stats. Stats can be broken. Of course, this is still an evolving situation, and we'll keep an open mind to every situation here. But we do know that central banks have a tendency to break the system and come in and get involved. What do you think? Do you think that's going to happen? Let us know in the comments down below. Let's talk about some unusual dark pool and large transaction volume we've seen. We saw some SPY prints that actually didn't even get hit in price. Now, this could be someone getting a little excited, but it does mark the good chance that probably the market will want to come down at some point and hit into the 430s. But someone did get excited, whether that's a sell or a buy to be determined. But of course, a large trade did occur around the 430 on the SPY. We also saw that we got a decent amount of treasury bond trades. Now, we've had quite a few TLT trades recently. This is the 20-year TLTs, and this is a 3x bear fund for them. The largest transaction, which is followed, of course, by the second largest transaction. Could this be bears that have been trading treasuries actually closing their positions? It's highly likely that is, but it doesn't mean that we've ended the treasury sell-off just yet. Historically, what's happened is treasuries and yields have actually gone to a new high, and they kind of top off usually around another 50 basis points max, and then we tend to see a probably bottoming of the market. And we'll talk about that as we look at treasuries later on today's video. Now, the people are focused on China. Now, China, everything's going wrong. They need stimulus, they need it bad, and of course, the central bank over there has been basically trying to cut rates to try to support the market. It's not working. We all know there's a massive issue in the property market over there, but I wouldn't discount them from coming on in. The only problem is tends to be October that they do this. So of course, September, we might see a little bit of a turn in the stock market, and we're looking for that. I love these fun names. We've got Yin and Yang. Yes, that is right. So Yang is a China Bear 3X fund. We saw a large dark pool transaction at the highs. Again, it could be profit targeting after maybe getting in on a short. And we saw Yin, which is a China 3X bull. These are completely disconnected, having a large transaction. So could it be that a large institution is actually starting to get in to the bull side on Chinese stocks, even though the news is horrible? Remember, Buffett sometimes says, be greedy when others are fearful. Is that true in this case? Well, we have to believe that the central banks over there will not want to let it fail. Speaking of which, what about the American market? What does everything underpin this week? Well, I think it's Jackson Hole. I think we all agree that the Fed's information there will be interesting, but also the market may pin itself on what has really been the poster child of the March to this time rally, which has been Nvidia. We have the earnings this week, and I love this chart because, of course, it shows us the expectation of the moves. It's all good to know that we have earnings coming up, but how big are the earnings results going to be? Well, it turns out that we've got a plus minus 11.5% for Nvidia. That's huge when you think about market capitalization size. Piton as well, that's a big one. I wonder how that's going to go. And of course, another favorite of quite a few people, which is Snow and SPLK. So really Wednesday after the close, that's the one to be watching. And if Nvidia comes out and it blows the market up in terms of everything looks really, really good, can you imagine? But what if it's a buy the rumor, sell the fact? Ooh, it's going to get bad initially, and you could see some selling across semiconductors as well. That one, I think, is to be watched. Speaking of large transactions, let's go over to the options market, where we saw for the first time in a while last week puts start to overcome calls. And guess what? We ended up hitting pretty much maximum pain perfectly. Now, if you're not sure what maximum pain is, definitely subscribe to the channel because we talk about it once every month, which is the third week. And September is going to be huge. I mean, it's quad witching. There are puts everywhere. There are calls everywhere. I'm excited for September and October this year. They're going to be some massive maximum pain potential candidates. But for people that were targeting maximum pain, they finally had a good month. That means that the market kind of got the most amount of profit from selling options to us, the retail traders. Good work for them, bad for us, unfortunately, unless you were a lucky one. But what about the options activity on the Friday? Well, we ended up seeing quite a lot of unusually large options activity, which makes sense. It's the OPEX. But at the same time, take a look at this. There were some big ones. J&J, because of this spin-off thing, 4.31. That has had so much options activity on it. Then we scroll through here and you can see there's other big unusuals, but it wasn't really probably a day where you can pay too much attention to it because there was so much transactions going on with the maximum pain. As we mentioned before, puts and calls, 51% versus 49% calls and 46 million. So certainly a large day of transaction. What about rotation of the street? How have they been going before we get into the charts, the indices, and of course everything you want to know about crypto as well? Well, it turns out that we continue to see these strange inflation plays playing on. So things like energy, it's doing still very well, 0.99%. I still think energy is probably topping USO. We've talked about the unusual activity on that particular trade. But at this stage, we've got utilities, semis, and even staples. All the defensives and some strange things happening throughout the Friday session. We'll be following that this week. If we go to the last 5 days, semiconductors don't look as bad anymore. Basically because of one semiconductor, which is NVIDIA, which tends to hold strong into the earnings. And that's actually a pretty simple and normal play. But at the same time, other things have gone poorly. Unfortunately, gold, of course, has suffered. We were looking for gold to do a bit better during the GDX and Barrick and all these other ones. But realistically, once that took the lows, it wasn't looking good. And the main problem for gold is yields are increasing. That's terrible for gold, good for the US dollar, and of course, bad for treasuries as well. So some big transactions here, not really a super defensive market. It's a strange one because usually you would expect healthcare, utilities and staples to be at the top at this stage. They're not really. In fact, we've seen moves towards metals, we've seen moves towards energy, and it is a strange market from that aspect. But what isn't strange is the way the market's selling in terms of overall rotation out from the overall movement below moving averages. Now here is the percentage of stocks above the 50-day moving average. We usually expect during a nice sell-off for this to come down into the 25s and 30s. We haven't quite hit it yet, which could mark that we are not near the bottom just yet, and that rallies could be still met by sell demand, especially this week, which is historically still a weak, bad week kind of for August, and usually a bad week overall for markets. So this is going to be something that we will be watching. But of course, we're looking for this to come right back down. Now, if we go to the 20 moving average, which we'll load up here on the charts now, you'll see that's at 22.3. Not quite down the 15s yet, but we did say that around 25, 20 is something that some dollar cost average people will be looking at and saying, well, 6% historically, that's decent pullback, although it's not ripping off enough of the market. It's something we'll be looking at. This is the big one, US 10-year, US 20-year, US 30-year. It's having a monstrous effect on, of course, everything to do with the markets. And it's not even inflation-based. It's just literally yield curve-based. And what's happening here is we're getting a breakout of the 10-year, which is probably not even arguably the most important interest rate to be looking at. And these yield curves, if we keep seeing this spike, remember, if this goes up, let's say another 50 basis points or so, that's going to be significant because it turns out that according to some data out there, I believe markets tend to bottom somewhere in between 10 and 15 days later or something after you see that breakout. So if we continue to see heavy selling, it actually could be closer to the market. Now, what I'd like to see here is capitulation. I'd like to see a big sell. A lot of people would not want to see that. But if that does happen and it hits some points that we'll look at later on today's video, you can kind of see how that could be like a maximum fear of this recent pull up. Let's move over here to the VIX. What's going on? Well, the VIX is spiking finally. We saw some relief here on VIX expiration this week, which is where the VIX options expire. But at the same time, it's the zero DTEs that have been slowing this down. At this kind of sell-off, you almost always expect the VIX to be a 25 plus. It's not anymore because of the zero DTEs. We'll talk about that in a subsequent video. There's just so much to cover today, so we won't do it right now. But yeah, it's certainly being suppressed. So the VIX is not the best reader this year. Remember, if you're going to read the VIX, use VVIX, which shows you the underlying volatility of the VIX. And you can see that spiked. And I expect this to actually go back up this week coming into NVIDIA and Jackson Hole Symposium. So don't be surprised at all for the volatility of the VIX to increase. What about copper? Well, it did rebound and it came off the 200-day moving average, or 200-week moving average, which you can see here has been a pretty good hold for copper. It didn't quite close on its lows, which I think could show that maybe there's a little bit of expectation of some China manipulation coming through on the markets. We also know that the dollar index has continued to remain very strong, and although it did post a long leg doji on the Friday, which is of course a low and a high, and an open and a close pretty similar to each other, we don't know it's topped yet. We know that's supply. Okay, that's fair enough. Here's supply. All this issue in here could be selling, but we don't have any triggers. So at the moment, dollar is still long until proven otherwise, and it's kind of the same way with gold. Gold is still unfortunately short until proven otherwise. Once it took the lows in here, the way it's closed this weekly, which is very bad, you'd have to think relief is going to be mostly met with sell. And of course, if the US 10-year, 20-year, and 30-year keep getting worse, which they certainly could be. In fact, let's load up the US 20-year here together. So US 20Y. When you load that on a chart, you can see the pressure that it's put under. Now, we don't know that it's going to close above yet. So US 20 years looks like that. US 30Y looks like this. So you'll have a look here again, right at those highs. Some of them have broken out. Like the 30-year is actually out on the weekly. The 20-year isn't. And of course, the 10-year is just barely above. If these keep going higher, set alerts this week. You're going to need to see this. If that happens, gold's going to get hit. You're going to see dollar probably continue to strengthen or at least hold its own. And more importantly, treasuries are going to get hurt very badly. So you want to look at treasuries because the weekly close was pretty nasty for treasuries. It is back down at these levels. So it's back down at exactly where you would say the bottom is technically in from a support resistance trader. So if you're a support resistance trader, you're looking at this and saying, buy, 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 buy. Yeah, that's fair. I mean, it's a fair point. There's no turn yet, so you don't know there's a V. And we often say, don't buy the dip, buy the V instead. And of course, we want to be seeing here most likely the market going towards 88.90, which marks a very critical point. So although there's been large transactions on treasuries, remember they don't deal on stop losses. Like traditionally, most of us retail traders have stop losses or probably some kind of mental stop loss here of where we would get out of a trade. They descale and upscale their position. So they basically scale in and scale out. So we know that that's a big thing there and something we are looking at. US oil, well, that's recovered. No new break low, so we don't know we're in a swing short for oil spot just yet. So, of course, we're watching that. We'll update the charts when necessary. Tesla continues to be weak. That was a very bad week for Tesla traders if they were bullish. Luckily, we talked a lot about the key zones, which was specifically up here. And once that got taken, of course, we expected it to come down here. Now, it's almost at 210, which was the beginning of where we thought buyers might commit. And we're looking actually at things like this daily 200, which sits right on 200. So again, we keep selling on this market. 200 seems like a pretty interesting strike for Tesla. 210. What I'd also do is get out a fib. If we fib from the low all the way into the high, 1 second, we'll do it together. You can see here that we're not quite at a 61.8 golden fib, but all of this in here could be where you find those traditional buyers. Now, last time, I know a lot of you still give me for this, we were talking about 140, 145 because we wanted the golden fib and it stopped just before. So we are looking for the V. If we get a V, well, maybe we have to admit that this is the low for Tesla for now. But at this stage, it doesn't look like it. It looks pretty bad. Apple, yeah, AAPL, that fell through. Again, no turn point here. We will have alert set at 180.85 at this point. We do know that, of course, it bought up on the options expiration, closed the weekly underneath the 20 moving average. The 50 is still super open, that 166, 164. So we're looking at that on charts. We'll be updating on AAPL. It's going to be important. And it's not just that. Look at Google. While it's been really, really high, if we break down the daily, it did kind of show that, a gap down here on the Monday session would probably put in an island reversal here. We've got Meta as well that's been getting hit. That's through a lot of moving averages that it hasn't found. Still a little bit of movement to get to the 20 moving average exponential. And of course, if it got down here to 40, that'd be an exceptional level. You'd probably see a 50 exponential moving average with the 200 weekly. I love a big ribbon cross. That's a dynamic support that we'll be watching on these charts. Semiconductors also found weakness, hit the mean reversion, which is the 20. It hit the demand as well, so I can see why a bounce happened there. But NVIDIA is holding this thing up. If NVIDIA goes bad this week, it's going to be bad for semis, and we're going to fill these gaps. So I'll be watching very closely, and of course we'll be updating together on this charts to see what's going on with semis. But semis are important. Let's move over to the indices around the world before we do US. First up, Germany hit its demand, so another support technically hit. This is exactly where we expected the German market to get to. If rallies do happen, there should be sells in here. We do know that this could be a massive Wyckoff as well. So we see BC, UT, UTAD. We've talked about this quite a lot. And this is an exceptionally good TP zone. If anyone got it, congrats to you. Well done. You held firm, you got into good trades, and you've done very, very nicely. So it's on demand at this point. We saw buying come through and the pressure. We'll update as we see fit. Australian market, well, it's fallen as well. The double top on the XJO for the Australian viewers was a big thing. Of course, energy started to fail a little bit. Banks started to look a little bit shaky. But in general, it's still within a monstrous trade zone. So I've shown you here the most traded area, which is up here. And then, of course, we're actually underneath. There's a lot of trade that goes through here, which you can see in the structure anyway, but very little that's gone through the lows. So I don't think it's a great technical, but you could make a case for around 7,100 to be a bit of a buy zone for the Aussie at this stage. I think it's very, very minimal at this point. Russell 2000, what did it do? Did come down to the trend line. So we've got the trend line that goes through the lows. If you've been watching the channel for a while, you'd know I'm not a huge fan of trend lines themselves, but you can see previous resistance, previous support. Not enough buying pressure here just yet. Daily 200 moving average, that's good. Trend line, that's good. Again, there is some demand here as well. So you can see why people may have tried to buy this zone. It is logical. However, it doesn't have enough reasons underneath. If you go to like 2 hour, you'll just see this initial pickup. Now, if you're a scalper, you're going to look at this and say, that looks pretty good. We've got some movement. We've got a drop. We've got a nice rally. That's good. It looks like it's done a little bit of a turn. So if it pulls back through the Monday session, we could see some relief as the market comes back up. A swing trader will say, well, I haven't got enough yet. So I think scalpers might like the bouncing they're seeing on some of these market conditions. NASDAQ came down to the long leg doji. Didn't quite hit the 20 exponential moving average mean reversion on the weekly yet. We actually got underneath this previous demand as well. I think the NASDAQ's pretty hard to read here from that perspective. Again, it didn't quite, it just rallied above, but it doesn't look as nice as the Russell 2000 at this stage. I think NVIDIA will have a big thing here. What about the S&P 500 though? S&P 500 was pretty good. 20 exponential hit. So technically the mean reversion we've been rabbiting on about for a while, although you could use 20 simple moving average and it wouldn't quite have hit yet, has been reached. And the thing here is it also reached it as it hit that big weekly close low and pretty much a big support or demand zone. This was one of our major targets, 43.30. And if it gets worse than this, it could get kind of bad. So let's just talk about that as a concept here. This we know, so the structure in here on the left-hand side is major. And I mean major, major. There was huge trade there. We know the market coiled for ages before getting absolutely ballistic back in pretty much April, May, June into July. We know that if the market's going to sell aggressively, we're kind of coming in this point here between August and September where it usually will do so before, I would guess, central banks start to step in because it's pretty dodgy right now with what they're doing. Every time the US 10-year goes up, they just kind of come in and support the markets. That's something we've observed many times before. So if it does get worse and it starts to capitulate, how low could we go? Well, I've talked about this for a while. 4150 to 4200 seems like a very plausible zone to see the next buying. So it's kind of like here, or it seems to be around that 4200, 4150 zone. What do you think in the comments down below though? Always interested to see everybody's opinions on this. US 500, you can see again the futures coming down to this demand level. This was our second, so 4400 being the first, the second being 43.30, 530 kind of area. So yeah, it pretty much hit perfectly. And then if you've been watching, this is the big one. Look at that daily 200 sitting there, 40,200, 41.50. We know it's a trade zone. I'd be excited to see that price. I think it's healthy for the market. You might say, well, I think the market should go to 3,200 because this is all stupid. Yeah, it is stupid. I don't disagree with you. However, this is the way that these central banks have intervened. Every time it breaks, they're not letting it go. And unfortunately, that's what we saw again with Silicon Valley Bank. And of course, we've seen that with central bank liquidity, which we will be updating this chart this week. Central bank liquidity versus the market. I've got some changes that I've done to it. So we'll see whether that gives it a little bit more accuracy with what's happening next. Let's move over to Bitcoin. Is it on a demand level? Well, yes, it came back down to here. I'd love to see Bitcoin a bit lower. We're going to do a special on Bitcoin moving forward because, of course, I am excited for Bitcoin over next year. Now, I'd like to see it really low first, if possible, because that would provide good opportunity. But it doesn't like the high yield environment, similar to gold. It's not exactly great for growth, and this is seen as, of course, growth, or some people say it's gambling, or some people say it's whatever. But it's not really a net income asset, especially with all of the problems that have happened with staking recently. So we've got here double top potential. If that comes through, of course, it could get pretty brutal on Bitcoin, but it is at that kind of buy zone, temporary. And this happened, of course, thanks to the problems in China. And of course, we saw SpaceX also sell their position. But really, it's probably Evergrande situation that's done this to it. So it's on the demand. Second up, we would like to see about 22,250, I think would be sweet. And I wouldn't even mind to see it a little bit lower. If you take like kind of double top metrics, let's say you believe this is a double top, and it actually breaks through, that's going to push in to these lows down here, which you can see were hugely purchased before. So like that 18, 19K, some of you are probably very excited about that. We do want to look at what historically has happened and how we usually break down this market. So I'm excited to talk about crypto very, very soon. Let's load Ethereum onto the chart. You can see here, it also dropped down to about 1561, but all the alts have been getting hit and most of the trend lines are through. This is a panic sell. The question is, does it get worse before it gets better? And when do the central banks probably step back in like they have? Unfortunately, we have to expect them to come. So what else are we looking for this week? Well, of course, there's a whole bunch of data coming out from the US. We've got PMI coming out, unemployment claims, and then the big one here, which is, of course, ECB and Fed Chair Powell speaking at the Jackson Hole Symposium. Will the Fed get involved again in terms of their discussion about all of this? Are they happy with what's going on? Will the market look for support from the Fed in this symposium? We'll talk about all of that throughout the week. But at this stage, it's a very exciting market, a lot of volatility, and usually August kind of ends with a bang. So let's talk about that. Thank you very much for subscribing. If you enjoy the content, smash that like button, hit the alerts, and we'll see you for a big week to come. NVIDIA, remember, Wednesday after the close. Bye for now.